On today's episode of the Cryptoverse, we're going to get an update on the growth of the Lightning Network. We're going to take a look at yesterday's price dip and the first ever set of cryptocurrency grades from a rating agency will be released this Wednesday, the 24th of January. All of that on today's episode of the Cryptoverse, so stay right there. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. First segment of today, Lightning Watch. So let's have a look at today's stats then. 107 nodes now exist on the Lightning Network, on the main Bitcoin network, with 237 channels between them. So the total capacity of the Lightning Network is around 19,000 US dollars, or about 161 million satoshis. That's probably a more accurate way of measuring it because the dollar value is going to fluctuate, isn't it, from day to day. So we'll have to measure it in satoshis. I've got a spreadsheet going because I want to measure the growth on a daily basis and then trend that out. But I've only got one entry in it so far, so that's what we're going to have for now. So despite these stats, the old Segwit is still only accounting for about 12% of all Bitcoin transactions on the mainnet. I personally would expect that to increase as more and more wallet services adopt Lightning, right? And while the Lightning stacks are great, as far as I understand it, there's no way for us to know how much actual value is being transacted inside all of these payment channels because the signatures are being swapped in between two parties privately in that encrypted channel. And then if you want to know what this looks like on a graph, this is that site I showed on the live stream last week on Friday. It's p2sh.info, and it's the Lightning Network graph that shows the capacity of the network in BTC, which is now above 1.6 Bitcoin, and the number of open channels. So actually, the number of open channels is now, it's crossed over the amount of Bitcoin. So that's good. That's what we're going to see. I suppose decentralization would be the number of open channels being enormous as compared to the amount of Bitcoin. You know what I mean? So that makes sense to me. If it doesn't make sense to you, let me know in the comments below. So let's take a quick look at the price dip from yesterday. The recovery that we had from the major crash, right? It was happening. And then yesterday, we had this rude interruption to the recovery with this big old dip. It pretty much gave back all the gains from Saturday, which is interesting. This is a complete turnaround. So we recovered on Bitcoin right back up to a high of 13,017 in fact. And then the following day, yesterday, we dropped all the way down to like 11,500. How rude. Now, as far as I know, this was just some nonsense about Indian banks starting to close accounts of various customers when they found out they were sending and receiving money from cryptocurrency exchanges. So I guess the fact that it's now stopped, the bleeding has stopped, the falling prices have stopped pretty much, that shows the significance or the perception of India's market in terms of volume. You know, if we know that China and say Korea have mad cryptocurrency volumes, and then if there's China or Korea bans Bitcoin, there's mad panic, whereas almost like India bans Bitcoin, which isn't because it's not a government thing. It was just the banks restricting Bitcoin. There is a bit of a panic, but nowhere near the size of, say, the China FUD or the Korea FUD. Now, the overall market cap has stabilized by looking at CoinMarketCap's market cap chart. That's a mouthful. And there's now a mix of single-digit gains and losses in the top 20, unless you look at VeChain, which is just outside the top 20, which is up 25%. Definitely leading the pack there. But don't want to talk too much about that. It seems temporary to me, and looks like we're back on track now. So let's get on to the major story, really. Weiss Ratings. It's WEISS ratings.com. So Martin Weiss, I'll call him, is the founder of Weiss Ratings. So this is a financial rating agency. So they research stocks and funds, banks, and they do their level best to give an objective rating in terms of risks and rewards. So they've even got all the banks listed here from A+ grade rating all the way down to E and F, I think is the lowest you can get. Now, they are set to become the world's first rating agency to release gradings for Bitcoin and cryptocurrencies. Now, according to this countdown on their website here, which you can see if you're watching this on DTube or YouTube, they're set to release the first batch on Wednesday morning, within 48 hours from now. Now, how this is going to work is they built a computer model that grades each cryptocurrency by computing a whole range of factors to arrive at an overall rating. And they're going to arrive at that overall rating by grading it in 4 different categories. The first one is what they call the risk index, which is like how low could it go, right? How much could the price fall? Then they look at second factor, which is a reward index, which is basically how high could it go. So those are the basic risk reward grades. The third category is what they call their technology index, and that looks at things like the source code, the scalability of the network, the robustness of the code, the flexibility of it, the tech stuff, right? The actual technology. And then the fourth category is what they call their fundamental index. So this is like looking at real world adoption and security, and that's really the reality test, right? They call it fundamental index. It's like the reality test. Are people going to use it? Are people actually using it? How does it perform in the real world? How many transactions is it processing? All that sort of fundamental stuff. So those are the 4 categories they're going to grade it on, and then come out with an overall grade of A to F. And each cryptocurrency will get one of these grades from A to F, just like every other financial instrument that they grade. But bear in mind, they've built a computer model, right, that's going to be constantly adjusting that grade as it gathers new information. So yes, they'll have a fair set of grades, but we need to watch this very closely as it fluctuates. So those are the facts, right? What are the implications, though? That's really where the value is going to come from in this episode. Now, I think this is going to be very popular because it's a shortcut through the, let's call it the ungodly amounts of information in the cryptocurrency space, right? Which is why these agencies exist. There's an ungodly amount of information in the regular financial markets, let alone the crypto markets. So institutional investors will use rating agencies to get an objective view of themselves, right? So that's why I think it's going to be very popular. Now, while no one should rely on this grading as a single piece of information, you can't rely on this one piece of information as being the entirety of your research. Despite that, I'm certainly going to include this as a single data point when I'm doing my research, right? I'll just put it into the basket of things I check anyway, and this is going to be a good one. The downside, I suppose, is that because so many people will be looking at this grade, it's likely to have a disproportionate amount of power, right? While Weiss ratings, they publicly state they do not accept financial compensation from the entities that they rate, which they say is unlike the other rating agencies like Standard & Poor or Moody's or Fitch or AM Best, right? This is a possible attack vector. For example, like what's to stop them loading up on the A-grade coins prior to the release of their research, right? They can say they're not doing any trading, but there's no easier market to trade anonymously than cryptocurrencies. So early access to the rating information gives them a chance to, say, get positioned in the market before everyone else. Now, I'm not questioning their integrity specifically of Weiss ratings. I'm just pointing out an attack vector that would apply to any such rating agency that was going to do this kind of thing. And it's specific to the cryptocurrency market because you can trade anonymously. So it's really difficult for them to prove they're not doing any insider trading, right? They can't actually prove it because their trading could be anonymous, right? Anyway, I'll be reporting on the results of this, no doubt, as soon as it comes out. However, if you want the news the instant it is released, then you can go to this page, which I'll put in the show notes for today. If you listen to this on the podcast and can't be bothered, it's finance.weissratings.com/crypto. And then if you put your email address in here, they'll email you as soon as it's ready. Now, I'm going to make a prediction here and say that EOS is going to get an A or a B. So on Wednesday, we'll see if that prediction is right or wrong. All right, thanks very much for joining me today, guys. If you like this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you would like access to my very best material, check out my website. It's cryptoversity.com. Click on courses. You can either take one of my online courses that you see here, or scroll all the way to the bottom and you'll find my 2 first ever live workshops. One is an evening talk, one is a 1-day crypto investing workshop. They're both coming up in February in London. So if you want to come meet me in person and learn from me in person, check out those workshops. Other than that, guys, I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.